and welcome to CryptoCurrents. This is Monica Profit. I'm your host, and I'm here with Thomas Ruble, the founder of Nirvana Finance. Thomas, I'm so glad to have you on the call. And this, it's just amazing. I've been geeking out on your tokenomics like crazy, and I don't want to get too eager, but I'm very eager. So thank you for coming on.
I'm super jazzed to be here. Yeah, before we went live. The energy was palpable between the both of us.
It's true. It seems like we share a real nerdism for tokenomics, and I'm excited. I want to dive into all of the stuff that makes me happy, but I also want to make sure that any audience member who might only be encountering this as their first, foray into crypto isn't like, this is full of nerds and I don't want to do this. So I'm going to
Well,
try to keep it a little bit talk to me like I'm five, and also a little like, tell me more. How did you come up with that algorithm? So this is going to be great.
yeah, we'll both try to temper the fact that math is each of our respective love languages.
You're right. That's absolutely true.
Yeah.
So math is a love language. It sounds like you had a lot of pretty varied experience applying this love language in many different places, from healthcare to AI, all over the place, right? And then you kind of
hmm
landed on this extra nerdy math, extra loving thing called what is it? Algorithmically created floor in a tokenomics model. I mean, how did you get here? What happened? Where did you start? It wasn't obviously as an English lit major, was it?
I did pursue a PhD in philosophy for quite some time, and then thought the better of it, and moved to computer science late in my career. But from a very young age, I always wanted to reinvent money. No, what's amazing about crypto, the real promise of crypto is the immediacy of it. Immediacy that anybody can access it, the immediacy that nobody gets in the middle of it. And that was the whole promise of Bitcoin, which is there are no intermediaries that can deny you a transaction. Then it's also really immediate to just build something. It takes very little human capital and capital to build a product that people can find use in. And
Says the computer scientist who already knows how to code. Just gonna say, because it seems to me like it's much more of a heavy lift for those of us who don't know what you know.
I think that part of what made it so attractive was after working at places like Google, where you have to push something through five different committee meetings and an ethics session to change the color of a button on
Oh my
Gmail.
god.
There's something about working in DeFi that's just a little more, the feedback loop is tighter, shall we say.
To say the least. To say the
Yeah.
least. Yes.
And this immediacy is also that everything happens at the rate of a push of a button. That I think the real aha moment for a lot of us, if we get into this thing called decentralized finance, is that I can just get a loan on my Bitcoin or whatever in 5 seconds.
Yeah.
I just deposit Bitcoin and I can borrow it. You just don't see that
Yeah. That's
uh,
true.
in the legacy world, shall we say? It doesn't mean
Yeah.
it doesn't need to be there. You don't need a blockchain for that. Like my brokerage could give me a line of credit on the S&P 500, but they just don't. But we're doing that in DeFi. That's what's exciting.
So when you said, from a young age you wanted to reinvent money, I know that was sarcasm, but also I can see there might be just a small hint of like earnestness behind that, a kernel of it. How did you come to how did you come to algorithmic trading? Did you just do this a lot beforehand? And then how did you come to, decide that you were going to make a very different economic model embedded into a new cryptocurrency?
You know what? I did say that flippantly, but there might be something there that crypto. Okay, so I worked in philosophy and then I worked in crypto, and I think in both cases it selects for a kind of individual that is ideological in some way, that is concerned with the deeper patterns, the essence of something. How can you get back to basics and bedrock, strip away all the unessential cruft? So much of that happens in crypto when they try to take an exchange like a Robinhood, but boil it all down to just a piece of code. A code where tokens come in, tokens go out, you buy, you sell, you trade, and it just runs automatically. You can eject the unessential parts of a business and reduce it to this pure crypto primitive.
Well, in
So
that
how,
sense, you also can sort of strip out any potential for human error and human bias, right?
that's
I
right.
mean,
That's right.
ideally, other than access bias, you would, when someone has access and they are fluent enough in it, it's actually, It has no bias whatsoever.
That's the point of this. If you were in 2008 and you read the Bitcoin white paper, the first paragraph mentions that this thing will solve fraud. And then imagine that a time traveler from 2025 came back to visit you, exits the portal and like, hello, good news. We made a whole industry based off of this idea. And you would say with some understandability, like, so we cured fraud in the future? That's amazing. And of course, it's been the opposite of that.
Yeah,
And
isn't that
crypto has
amazing?
this stink on it at being the most fraudulent and the most scammy.
But
But
not
your
if you
point,
compare it to cash, actually. I mean,
yeah,
a lot more fraud is done and a lot more illegality it occurs with cash than does Bitcoin. And I like to just point that out. Crypto has not eclipsed cash at all.
let's just say pound for pound.
Right.
Pro rata.
Yeah.
At least crypto has that reputation. I just wanted to underline that point that yeah, when you get rid of the human in the loop, you're getting rid of censorship and you're getting rid of error, you're getting rid of bias, you're getting rid of emotion. And you can just say with Bitcoin, that's the program. That's the book. This person has this many, this person has that many, and nobody can get in there and fiddle with it depending on how they feel one day. And the
Right.
monetary policy is just going to emit 21 million. The end. There's
Yeah.
nobody that you can appeal to try to change their mind.
And you
That's
can't call it Mr. Bitcoin and say, stop that. We don't want that in Vietnam or we don't want
yep.
that in the United States. You can't call it Mr. Bitcoin. You can't. I was actually having this debate this morning with a friend of mine and I was like, they said, oh, well, I wish there was just an actual company behind it actually doing a thing because I buy stocks. And I said, okay, there's cross-border payments. There is fraud proof, a single ledger transaction. There's distributed fraud proof eventualities, all of these things. And I'm like, not one. It's even faster now because of the Lightning Network and other side chains. The Bitcoin network and its side chains and its ecosystem are faster than Visa, right?
Mm-hmm.
So not any company has solved that many things. Like Western Union is just one cross-border payment and they're exorbitantly expensive. No one has solved that many problems and they can't be stopped and they can't be sued and they live in the network in which they created. I mean, you can't think of anything stronger. I don't know. I
Right.
was such a convert.
But let me ask you: have you ever lost your private key or sent money to the wrong address?
That has happened, correct, sir.
Yeah,
That has
yeah.
I hate to admit that, but that has happened.
Same here. So I understand the sentiment that like I wish there were a support desk for Bitcoin,
Yeah.
Bitcoin.com. It's like, hey, can you please revoke that transaction? But that's crypto. That's crypto for you.
Yep.
And if it's really going to separate itself and run as a parallel paradigm to conventional finance, you have to embrace that. That's the rule of the game. And if we're going to regulate it any differently, I think it should embrace that paradigm
Yeah.
fully. I think the problem is largely that it hasn't fully embraced its crypto principles, and that you have sort of a pseudo crypto puberty going on, where
Okay.
yes, these blockchains are unstoppable and irrevocable, and whatever happens is going to happen. But the things that we trade on them, the Dogecoin, the Bitcoin,
Yeah. Yeah. Yeah.
has a lot to do with humans. Mr. Saylor and his strategy owns over 2% of the supply of Bitcoin.
Yeah.
And he's borrowing against it, and if he gets margin called and gets put into forced selling, that'll really destabilize the Bitcoin market. Knock on wood. I don't think it's likely that
But
that'll happen. But the
it's
point is, there's
interesting.
still a human influence on these
But you're
assets.
saying that like it would destabilize the Bitcoin market, and it would. And the reason for that, I realized, is not because 2% of an entire supply is enough to destabilize a market. It's that 2% of the entire supply is a large percent of the entire circulating supply. So there's actually these hodlers that own an enormous amount of Bitcoin that aren't doing a thing, right? It hasn't moved in a long, long time. There's not a lot of circulating supply in Bitcoin. So it's actually very, oddly enough, it's very flimsy and reactive because of that.
Thanks for making this a safe space to share opinions that might not make us friends. Bitcoin is a very resilient program. It's a very resilient network. If the United States of America tried to shut it down, they could not. You
Right.
lop off the head of the Hydra and three more will spring out. It's resilient in that sense, but Bitcoin, the asset, is not resilient for the reasons that you gave. It's heavily concentrated. It's not that regulated. You can have market makers that put their thumb on the scale. It's a rather small market cap comparatively to
Hmm.
be a currency for the world. Maybe it'll grow up and it'll get more diversified. But as it sits right now, there's a strange paradox running through crypto where you put all this work into strengthening a computer network. The ledger is hard, but the dollar value, the value of an asset, is weak, which is obvious when you see this much volatility. It's just a lunatic amount of volatility with an asset.
So was that sort of the reason? Was that the rationale that sent you down the rabbit hole that ultimately provided you the insight into the tokenomics model for? Is it Ana or ANA? How do you pronounce
Well,
Ana?
no, as in Nirvana, yeah.
Ana, got it.
Yes. The, the goal of Nirvana is to create an asset, not a network, not a blockchain, but an asset which follows the crypto principles, an asset that is cryptoified. What makes something crypto and not conventional is that it's open, it's transparent, it's accessible, it's democratic. What makes something crypto is like what we were saying, there aren't these human intermediaries that can make mistakes or have biases or influence the system. That's really the dream of crypto, the whole project. Get rid of human influence. Virtually all of the assets that are traded have enormous human influence. When you see things like the Trump coin
Yeah.
or Dogecoin that Elon pushes, or NFTs for that matter, where what's going on behind the scenes, you have essentially a marketing firm creating these things, pushing them out there, and they've held back, 10% of them for them and their friends.
Yep.
You can dump someday. None of this is crypto. This is all just the same playbook of SPACs and ETFs and tulip
Yes.
bulbs and whatever. There's something we can do. So, what's the first thing you got to do to make an asset truly crypto? It's the simplest and it's the hardest, which is don't give it away. Just do not give it away. Virtually every single cryptocurrency since Bitcoin has operated this way. You set up a foundation, maybe in the Caymans. You create a computer program for a new cryptocurrency, and the first thing you do is you give 20% of it to the foundation. That's
You're
our treasury.
right.
Hey, we wrote the code, so we're just going to beep, boop, boop, print ourselves 20 million of the supply or whatever, and then give out the rest in some big initial public offering, set up ourselves a vesting cliff,
Right.
and we're going to sell our token 4 years later. This does not sound revolutionary. This just
Right.
sounds like stocks by another name. That's step one. Just don't give yourself any. I didn't give myself any, didn't give anybody any. I can't give anybody any because step two is the only tokens in supply should be paid for. Bitcoin kind of does this. You pay for your Bitcoin by running.
Yeah, you can mine your way into it. Yeah.
Yeah, you pay, I don't know what the cost is to run a miner. Let's just say several thousands of dollars a month in electricity and
Yeah.
special hardware. That's a real cost.
Hmm.
And you earn it. And that incentive makes sense. With other cryptocurrencies where you can just press a button and create them, like the Trump coin,
Right.
there's no cost basis to produce it. So you have to hold back that temptation to just give yourself something, to print it for free and make it so that everyone that's out there came from somebody putting skin in the game, from somebody buying it. Okay, now we have liftoff. Now we have liftoff. If you want to have a pure market, a market where there are buyers and there are sellers, you need the first two things, which is everybody is either a buyer or a seller. That's saying you at Trump.com, you can't just mint yourself a bunch of Trump coins and put it in a
Yeah.
treasury. You have to be a buyer of it. If you're going to have
No,
it, you buy it.
no more top feeders, as it would
That's,
be called in the more revolutionary terms, right?
there we go. There we go. And then secondly, if a market only has buyers and sellers, You don't have market makers. This is the weird thing about markets. Almost always there's a buyer, there's a seller, but there's a shadowy third party whose job is to make the market liquid. They're kind of just, I know I'm telling you what you know, but they're trading with themselves.
Yep.
And their goal is to make money. So they're nobody's friend. They're not a friend of the buyer. They're not a friend of the seller. They're trying to extract some money out of a marketplace. Get rid of that third individual. Because you know what that is? That's human intervention. Okay, so what Nirvana does is it has a liquid market without human market makers. You just have buyers, you just have sellers, and the buyers are buying from a computer program. The protocol is the counterparty to that trade, and the sellers are selling to a protocol.
Yep.
When you purify it, you can have an asset that is not under the influence of a human that has the wrong incentive.
Or any incentive.
That's right. You just have traders trading. It purifies.
Now, I think that I saw something, and this is part of why I wish I'd have I should have read your whole white paper or something, but also I'm glad I didn't, because I would be like, okay, I got it. We don't have to talk. Like that's not helpful. So I'm glad that I'm plenty ignorant coming into this. But you have an algorithmically created floor. Now, why did you come up with that, and what purpose does it serve? How do you achieve it, and how does a person come to believe that it's real and it's not going to be it can't be messed with in the same way that like Luna could be messed with?
Oh, Luna, Luna, Luna. Yeah. We could talk about that one if you want, because it's the opposite. The the inspiration for Nirvana came out of the euphoria a few years ago where you saw these massive Ponzi schemes erupt. And what makes a Ponzi is its fragility. It's that as soon as the music slows down, the whole thing collapses in a right hurry. And
Yeah.
you could see tens of billions of dollars wiped off the face of the earth in 2 days. The floor price is there for this to be an anti-Ponzi, which I don't know we have in conventional finance. At least I'm not aware of one. An anti-Ponzi is a financial primitive that actually strengthens when the music slows down. It doesn't get weaker and collapse, and then you're trying to catch a falling knife as you're trying to figure out where the bottom is going to be. The floor price is to make this asset a good candidate for national strategic reserves. An
Okay.
asset that somebody could amass trillions of and not be worried that they made a terrible trade. What Nirvana guarantees is the maximum downside at any entry point. Whenever you buy it, you always know precisely how much I could lose in the absolute worst case. This is how far down it can go. And typically it's somewhere around 40 to 50%. It's the
Okay.
maximum drawdown. But you don't have the same limit on the upside. It could go up to some unbounded, infinite value. You can turn things around where there's unlimited upside but limited downside. And I call it a store of wealth for that reason. That if you park your money in this, yeah, you'll ride the volatility up and down. You're speculating on the future, but you know with perfect certainty how much you could lose. And you can bake that in to your
So I have a
portfolio.
question. If it is a floor that is there, it can only say go down 40 to 50%.
Uh-huh.
Let's say I buy it, for an easy numbers, I bought it today for $1, and I know it can only go down to 50 cents. And that's how its floor works, right?
Yes.
I'm hoping that I'm getting this. And I buy it next week, and it's gone up now to $2, and now it can only go down to $1, or it can always go
Yeah.
down to 50 cents.
Yeah. That's it. The floor also rises. It ratchets up and it never
Got it.
recedes. So as the price, again, this is like what an anti-Ponzi is, where with a Ponzi, the higher something goes, the farther it falls. With an
Right.
anti-Ponzi, the higher something goes, the floor keeps pace
Right.
with it.
Okay. So,
This is another interesting property where, like, let's say you're just hearing about Nirvana right now. The asset has gone up about 500% since it launched a few months ago, and you might be thinking it's a little toppy. Like maybe I'm too late to get in.
Mhm.
But the fact that the floor rose 250% means that you have basically the same risk to your entry as somebody who got in earlier. Your
Right.
downside is the same as it was when it was $1, $10, $100, $1,000. It's always you
So
could maximally lose about 40 to 50.
so when I hear people say things like, "Oh, Bitcoin's so high, I'm not early enough. I should have been early. Like I'm too late." People think that all the time. And I'm like, "Yeah, have you looked at the global statistics on this? You're not too early. Don't worry about it. You're not too late." And but that's just me kind of trying to find other. But you're saying essentially in this particular asset, there this is sort of somewhat solved for the insider trading that can happen for someone getting a heads up on getting in early, right? It doesn't matter if you
Yeah.
get in early or not that it won't necessarily always rise at the same rate, but you're not taking any more risk than the first person that bought it. And that
That
equality of risk is a huge equality of in a market that usually has a ton of inherent inequality.
that's what crypto should look like. Where of course there's a fear of missing out where you should buy low and sell high. You can't get rid of that. A market is a market. Everyone's going to want to buy low and sell high. But you don't have to favor insiders. It's not like you miss the train forever. And one of the points of crypto is that anybody could get involved at any time.
Right.
And so this is a point that doesn't come up that often. I'm glad that you identified it. This is another example of the ethos of Nirvana that you're never too late. You're never too late. Just because it popped a couple months ago, that doesn't mean that it's going to come crashing down any day and run out of gas. If you want to create an asset that's truly meant to last for thousands of years, there has to be an element in it where it's always a good day to buy.
Right.
And it is usually a good day to sell also. And it just kind of moves hands and ratchets up and ratchets up and
So what were the
eventually swallows all the currency in the world.
I've heard this from so many crypto creators, and like this is going to swallow the currency of the world. And I'm like, oh, we'll see. That's it's a wonderful ambition, but and
No.
I love the way this could potentially affect that.
Bitcoin doesn't have a floor. You know, it's probably not going to go down to zero. It's probably not going to go down to 10, but
Yeah,
there's nothing preventing it from doing that.
that's
And
true.
if we see it drop, we're always wondering when is it going to stop?
Yeah,
And
right.
that's just it. That you don't know. You really don't know.
Interesting. So what was the like what were the influences that brought you to this idea? Like did you see like the drip network had this very high taxation in it and it eventually collapsed on itself. But
Mhm.
there was a 10% tax to purchase and 10% tax to sell, I think, and also to off ramp. There was there was all these taxes that essentially were supposed to make the whole network very robust and very kind of giving to the entire network for every action. And eventually that taxation was just it was too high. Maybe it was in poorly placed. I don't know, but it did collapse on itself. So,
Yeah.
yeah, what were the things, what were the inspirations that brought you to this particular approach to a different tokenomics model than what you've seen before?
I feel like most consumer products or just products in general, they fall into two different camps and they kind of relate to each other like a yin and yang. There's a family resemblance, but in some ways they're the opposite of them. You had BlackBerry phones, which had all these applications and you can customize it and physical buttons, and then the iPhone came out and said, let's just streamline this and make an elegant, simple thing that comes ready-made with everything you got. MySpace, Facebook. They're opposite sides of one coin. Most crypto projects, you're asking where I got the inspiration from this,
Hmm.
is the fervor in crypto over the last few years has been fueled by Ponzi's, not to put too fine a point on it, in that they prioritize short-term gains, short-term explosive attention-grabbing growth, and then just die a slow death over time as people move on and lose interest. You can build a house of cards or you can build a pyramid out of bricks. Take everything about what you mentioned with drip, where you had all these
Network fees.
eye-watering
Yeah.
valuations and taxes, whatever. You get a flywheel, but a flywheel is just a death spiral in reverse. And as soon a wheel can't go forever. You know, you can keep swirling water around in the bathtub and try to make money pass hands, but it cannot be a perpetual motion machine. And so it will come collapse back down on itself. The design with Nirvana is to be something that is permanent, it's durable, it's sustainable. It doesn't require outside money coming in to stay interesting. So you don't get this death spiral. You mentioned Luna. Is that fair game? You want to talk a little bit about the
Feel
Luna
free. Feel
fiasco? It
free. I
hit
mean,
me personally.
for context, I think it's a really interesting counterpoint, but and not everybody is aware of that particular how that all works. So I don't know if you want to jump all the way into that or you want to just kind of skirt around it. But absolutely, feel free to go in there. It's fair game.
Okay. That now I'm forgetting the numbers. I want to say maybe they had a 10 to 20 billion dollars of a token that was supposed to be worth $1. Am I kind of within an order of magnitude? I feel
Mm-hmm.
like it's yeah. And then another token, Luna, that was maybe worth 40 billion or something at its peak. Anyway, they had this dollar denominated token. It was
Mm-hmm.
basically a savings account. You just take $1, you get one of these tokens, and the promise from the marketing is that this is going to be worth $1. So lots of, I'm just going to say retail, not people who are addicted to crypto Twitter and insight on the information. This had mass appeal where they were just
Yeah.
thinking, I could take $20,000 out of my savings account, buy $20,000 of this dollar token, which is hard as a rock. And then this company also offered a high yield savings account.
Yep. That's
And
right.
by high yield, I mean 20% yield.
Yeah.
So everyone was looking at their 2% savings account. They saw this 20% one. It's crypto. Tom Brady is doing commercials about crypto. So I'm just going to take my savings and put it into this thing that produces 20% interest, risk-free, annual. It was a Ponzi. And that 20% made this token become enormously capitalized. Tons of money went into it. But as soon as it couldn't keep up those rates, people started withdrawing, and then it turned into a classic panic run on the bank, and it imploded over, I believe, 72 hours.
Yeah.
It took about that long for it to finally collapse. FTX was also about a 72-hour news cycle. That's how most crypto projects are done, which is let's get this hot ball of money in right away by making promises that we cannot keep. Promises about yield, promises about the future. Nirvana's just realistic. It's
So you
realistic.
have a credit facility in Nirvana, and it's the Nerve coin, right? The Nerve is the piece of your ecosystem that provides credit. Does that provide a yield to your users?
Yeah, I'll take both of those questions in order.
Okay.
So what makes an asset useful is credit. Like, is it an eligible collateral? Something most people don't interact with getting credit. I mean, probably the closest we get to this is with a home equity loan or something like that. But this is a really important property that if you have something, you can do more than just hold it. You can also borrow against it. So you can keep it locked up, keep your possession of it, but still draft some credit. Incidentally, that's how these billionaires don't pay taxes. They just, Jeff Bezos has a bunch of
Right.
Amazon stock and he just
Borrows
borrows
against
against
it.
it.
Right.
Yeah, and keeps riding Amazon up and up and up. That's what makes assets useful.
Yep.
In ordinary life, you have to know a private banker to take advantage of this.
Yep.
In crypto, we don't do the banking thing, so you can just borrow based off of your crypto holdings right away. It's really cool. And
Yeah.
if anybody's listening to this haven't tried it, you should. It's quite magical. Anyway, this ANA token has a floor price. Let's go back to this example where it's worth $1, but the floor is worth 50 cents. I, as a lender, could lend you 50 cents for your ANA and hold your ANA as collateral. It's worth $1 today. No, okay, now it's 90 cents, now it's 80 cents, now it's 70 cents, but it's never going to go beneath 50 cents. It's a rock solid collateral in that respect. I'm never going to need to margin call you. I'm
Right.
guaranteed that your collateral is going to cover that. You're not going to go bankrupt with your debt. And that's what the protocol offers. It's saying, okay, you have $10,000 of this ANA token. Oh, now you have 9,000. Now you have 12,000. Tokens moving around every minute. But the floor price is solid. So let's say, yeah, again, the floor is 50 cents. It's a dollar. You have 10,000 of them. You have $10,000 worth of ANA, but you have $5,000 worth of floor value. And so the protocol just says, yeah, you got a line of credit up to 5,000 bucks. Be a Bezos. Hold on to your ANA, ride it up and down, and if you got to pay your utility bill this month, just draft that credit. Be on your merry way.
So in
It's
terms of drafting the
honestly,
credit and paying something like a utility bill, where is this listed? How is it accessed? For someone who's very new to crypto, how would they go, this sounds crazy. Can I just go on Coinbase? Like, how does,
I know.
explain to somebody who's not only seasoned, but maybe unseasoned, what this access looks like? Because access is the last frontier of really equality, if you think about this in like the pure terms of what the technology offers.
Yeah, yeah. Crypto is still in the early days of the internet where you had to be an enthusiast with a home built computer, meeting up with your buddies in the garage to get them to work with each other. I remember doing this as a kid, playing like multiplayer games. Like it
You're
was
dating
an
yourself.
ordeal. You had to
Yeah,
pack up your car with your computer and yeah,
right.
and then spend 2 hours trying to get them networked with each other. Not gonna sugarcoat this. You still have to be brave and bold to use these kind of crypto applications. App.nirvana.finance.
All
It's
right.
about as easy to buy as, say, the Trump coin was, although I hesitate to even make that comparison. But the point is, you have
Yeah,
to be on a blockchain to use it. It's not going to always be like that. We've only
right.
been live for 3 months, and getting into large international financial institutions is just a matter of time.
Right.
It's just a matter of time. But right now, these are the early days,
Yeah.
and it's for the enthusiasts. But if you have heard of Solana and you know how to use it, then you can get in on this.
So it's on the Solana L2 or L1. So it's on Solana Rails, and
Hmm.
it's built on top of that. Can you explain why you chose Solana versus anything else?
Oh, Solana has the most potential for mass adoption. It's the most friendly to use of all the blockchains out there. Um and what makes something friendly to use is it feels like using the internet.
Yeah.
It's fast, it's cheap. That's the reason.
And you said that this was not VC backed. There was no allocation that you gave to the core team or yourself. And you mentioned to you it was really not a heavy lift. It was not an expensive thing to build it. But how like what did that P&L look like? How did you decide that you were gonna, how much did you risk, or how did you afford that? Because many projects, if they're really going to grow and scale, they do need that initial capital. Um, did you have a pre-sale? How did you end up kind of raising the funds, or did you not need to? Was it from another? Well, did you siphon it from another project?
The the protocol produces revenue. Uh, ordinarily, ordinarily, when you're launching a cryptocurrency, you are incentivized to give yourself some of it, build up some excitement around this currency that you've launched. Then, when the time is right, you sell from the treasury that you gave yourself. When you set things up like that, where you, the creator of a project, the promoter of a project, the believer in a cryptocurrency, can only profit or keep the lights on by selling your own asset into the market, it's like a
And
demonized.
therefore divest from the very thing that you were just
I don't
evangelizing.
know. It's a paradox. There's this other rival to Bitcoin called Ethereum, and they're stuck in this quandary right now where they're massive. They're the second largest cryptocurrency, but they have a foundation sitting on a treasury of this, and you know, they have a crisis of conscience from time to time where they just have to sell, or they're scared that the price is going down, so then they'll sell, or the price is going up, and then they'll sell. I mean, that's all they can do to pay for their engineers.
Right.
Anyway, we just sidestep that whole issue. There are fees for trading. I mean,
Okay.
if you send a Bitcoin from A to B, you pay a small fee. If you buy an ANA or sell it, you pay a small fee.
What is the fee to buy or sell?
It's actually community governed. I believe it's about 20-ish basis points right now, but I don't have any control over that. The community decides to make that fee whatever it is, which brings me to the next point, that these fees are actually shared out to the token holders. So imagine with Bitcoin, every time it moved from A to B, that fee that you're paying goes to the people who hold Bitcoin.
Right.
In point of fact, it goes to the people that run these mining computers, and that's their incentive to keep the electricity flowing. But it could have been different. It could have been if you're a holder of Bitcoin, you're receiving this dividend
Right.
24/7 for people trading it. And that's the way ANA works. That the people who hold it receive the fee pro rata to how much they own. So anytime there's a trade, everyone gets their fraction of a penny, and if there are millions of dollars of trades, everyone gets a serious dividend that day. And then these same token holders, because they're receiving the fees, they are aligned when it comes to steering the ship and deciding precisely how high these fees should be. They might decide to be greedy and make the fees higher on the protocol, but then there might not be very much volume. Or they might decide to lower the fees so that there's more volume. I really don't know what's going to happen.
That is very interesting. That is very interesting. Now, do you is it simply that you feel like that there are better that the tolerance was set better than this 10%? I mean, there was a 10% tax. There was a 10% fee. It went back to the Drip network had this really large tax, right? That went back to everybody. They were trying to create a dividend producing ecology as well,
Mhm.
ecosystem. And do you just feel that because this is, first of all, in the community's hands, and secondly, because they just have, it is much lower, that it's more sustainable? Because that 2% fee, I'm sorry, point two, like 20 basis points, 0.2% is like so small. It's sort of on par with many, market making protocols.
Well, if you're listening to this, token holders of ANA, I don't know, try raising it, see what happens. Um, this goes back to your point about human error. Like we've dealt with human bias, where you have foundations trying to sell their tokens, but then there's human error. I just have two eyeballs and one brain in my head. What do I know about what the optimal fee would be? I
Right.
could think about it and let the shower thoughts come, but I'm going to get it wrong.
Yeah.
And also, markets shift over time. The ecosystem is going to change, the environment, the sentiment's going to change. People are going to be really bullish or really bearish one year to the next. So you got to just let it tune itself. And who better to tune it than the stakeholders? The um, the point of all of this, of having there be and by the way, all this governance is automated. It's all part of the protocol. It's immediate, automatic. It's not that I have to wake up and read through the bulletin board and apply these changes. It's all part of the system. The reason for setting it up like this is that if I and the rest of the engineers were abducted by aliens tomorrow or absconded to Timbuktu with Satoshi, the protocol would still work fine. It
Right.
doesn't need anybody administering it.
What is the total circulating supply?
Good question.
And how
Uh,
did you come to that idea? How did you decide on what it should be?
that is an interesting question. Let's see. There are 6 million of these tokens in supply right now, worth $5.30. So the market cap is about 30 million, and there's about $24 million in the reserve backing it. There is no cap on the supply. So this is another dimension by which crypto can be crypto and fully separate itself from our conventional habituated ways of thinking about assets and finance. Bitcoin, I'm not going to throw stones, but it still has this conventional approach that there should be a fixed supply of something. It should be scarce.
Right.
And where do you get that idea from? You get that idea from like stocks. There's only so many shares of Apple. There are only so many shares of Tesla. It would be ridiculous if there were an infinite amount of shares because you couldn't value the whole company. You really don't have to think like that. Anytime somebody buys an ANA token, the price goes up. Anytime somebody sells it, the price goes down. Anytime somebody buys it, a new share is printed. The demand pushes the price up. You can have demand without a cap on supply. And I don't know, we could like pass the weed bong back and forth and go like, what is money? But it works. You know, you can have demand without supply. You come because again, it's an algorithm, it's a machine. If you want to buy the token, fine, buy it, and the price is going to go up. And somebody who bought it 5 days ago is going to see that pop in the price, and they're going to say, all right, I'm going to sell. You don't need a fixed supply for this dynamic to happen. So on $5.30 today, it could be $100 or $1,000 or $1,000,000 tomorrow, but it only gets there because there's demand for it, because people keep buying it and pushing the price up. And if they push it up high enough, there's going to be somebody who sells, and that brings the price back down, and that also decreases the supply. When I said earlier, I want this to be able to eat every currency in the world and be a strategic reserve for nation states, this is what it looks like for something that truly can stomach trillions of dollars without getting lethargic or collapsing under its own weight. You need a kind of system that scales and is elastic. So that's why it's set up without having a fixed supply. So it really could be the dominant global reserve asset.
Got it. That checks out 100%. I have no further questions. Nice to meet you. I'm just gonna go drink a Coca-Cola now.
We didn't
Uh,
even have to pass a joint.
you don't
You're
even have to pass a joint.
always sympathetic to these grandiose ideas.
I am. I'm very sympathetic. I mean, I'm very hopeful for, reimagined. Just the simple fact that we've already seen now government and money decoupled. It's such a small step, but it's so big to start seeing what new governance models can look like, new monetary policy models can look like. And just the fact that we have the innovation and the interest behind that and addressing these two things very separately and intentionally overlapping them only as we see fit now. I just love that crypto lets you just like shake the etch a sketch and like try again, like you don't have to bring any of the rules with you. You can just try again.
Really, really, yeah, yeah. A lot of the people that work in this space, like, in another life, they would have been designing board games or something like that. Or, as a kid, like a fun Saturday afternoon was to go into the woods with my friends and you build a city and you erect a social structure and come up with a constitution.
Yeah.
This crypto does select for this world building game theory kind of approach. Yeah, shake the snow globe and try to
Absolutely.
boil down incentive structures to something that is truly durable. Of course, it often can just turn into pump and dump scams too, but there are a lot of people who are focused on just that problem.
Well, and not just durable, but like we have our, you can see human beings react to incentives. That's it. So why not architect for our better angels? Why aren't we doing that? I mean, if we're the architects of the little rat maze we're going to put ourselves through, and we know humans are just rats after cheese, they're rats after cheese. That's it. Then like, at least make it a little bit better. At least try a new kind of maze. That's it, and push that out into the world and see if it might just actually appeal to a better incentive structure brings out better activities from human beings rather than trying to make some moral plea of what's right. Just look at, I mean, I personally I'm very curious what happens if everybody had enough money. What does
Mm-hmm.
that look like? I don't know. I mean, you can say that's a dumb thing to think about. You're a socialist. Well, I'm just curious. It's just a
What if
thought.
everyone had enough money? Yeah.
Crazy. What would we do? What if everyone just kind of had enough? I mean, I know what I do when I have enough. I do more creative things. I produce things that don't need to have a value. I get more curious. I have more time. I do these. I mean, I just see myself do that on weekends. What happens if we decide to do that? I mean, it was kind of like not that I'm a huge Louis C.K. fan anymore, but I know we canceled him. He should be never spoken of, blah, blah, blah. But he had a great bit on like people talking to God about like, God, I'm going to pray about this and that. Like, we don't have enough money. He's like, I left all of this food all over the ground. what are you doing? Like,
Right.
well, we couldn't do that. We needed jobs. Like, because we had to pay taxes. And it's like they just come up with these constructs that are just inane. And yet we all believe in them. And so I'm just like, yeah, what happened if we made, I wrote about this on a LinkedIn post recently. Like, what if I could make my money or a company work as well as my tomato plant on my
Right.
terrace, right? Like my tomato plant, I buy it once and it produces so many seeds, I never have to buy it again. It makes more seeds. It could make more tomato plants every single year for forever. I only paid for it once. Why can't I do that with other? Why can't we just make ecologies or economies that imitate ecologies? They're right in front of us. Those systems exist, but we just don't. We're like, oh no, exploitive empires. That's what we're after. Let's do more imperialism. Haha, colonialism was fun. Let's do more of that. And like,
Mhm.
let's just keep some people out. And I'm like, well, okay, we've seen that one. I get it. If someone was curious, they went and made it. I'm kind of curious about some other stuff, and it seems like your curiosity has also just gone in these very innovative, different directions, and it's inspiring to see you using the same tools that I'm also passionate about, but it to just make something so innovatively different.
I think there's some real truth to that adage, show me the incentive and I'll show you the outcome. I think you're right that, when you see the matrix, what you're seeing are incentives or just some kind of automatic will to go toward things. And what you're doing with that tomato plant is very zen, that the tomato has an incentive to produce fruit because that's its biological imperative. And so you work with that. You make sure that it has enough phosphorus and sunlight and water, and you just get tomatoes because the system enters into this dynamic homeostasis where it's just running on its own treadmill exactly the way it wants to. And I suppose that's what the Bitcoin network was trying to do also, which is say humans are incentivized to make money. They're incentivized to cheat. And so you balance those incentives by making it unviable to cheat the system. And then it just kind of runs itself because
Yeah,
it works with those natural tendencies.
100%. That is that's what I love about the Nirvana project. It's like you've just come up with a different set of incentives. You've put it out into the world, and you're watching, and you let go of the handlebars. I mean, like it's just pedaling on its own now, and it's great.
Yeah, yeah.
I really appreciate it.
Where the incentive is still to make money, to have wealth, to have value. And then there are other incentives to cheat or game the system or defraud. So you remove all of those. You remove all central planning committee, and then it just runs itself
Yeah. Let's
forever.
just see what happens. I love this. I love this conversation. This has been so much fun. And I realize that it says your name is Sid, and we didn't even get into that. But I know that your name is actually Thomas Ruble, and I so appreciate that Sid Thomas you came on and talked about this, came out of the
Well,
woodwork.
my parents called me Siddhartha, but my friends call me Sid.
That's great. That's fantastic. Well, Sid, it's been a real pleasure, and I can't wait to go to app.nirvana.finance and check out even more about this. And yeah, I can't wait to have you back on after this has been going for a while. It's only been 3 months, so I hope we can have a round two at some point in the future. And thank you so much for coming on CryptoCurrents. I really appreciate it.
Thank you. This was a real joy. Yeah, looking forward to. We got a lot more to talk about on or
We
off
do.
camera.
We definitely do. All right. Thank you so much. And I will catch you guys on the next CryptoCurrents episode.